Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And what you see here is again, we talked about the main option exposure that we have in the main symbol, the EUI, for the ICE option. So what I do every day is I say, okay, take a peek at this market and really, make an assessment based on my one-shot, one-kill trading methodology. What are some key levels out there and how I want to make this happen? Well, we've seen a market that's actually gone to consolidation. This is not really a great market to be long options in, because of the range-bound nature, just because of what's taking place. What's a way that we can handle this? So when I look at this, I see, okay, this is an area that draw a couple of fibs, from Bang. Sorry, that's an extension of fib retracement. Going down here. I'm just drawing some fib levels right in here, guys. Boom, boom, boom. Boom, boom, boom. And bang. Yeah, there we go. Okay. So what I see on the spot here is if we really, we saw today, at least at the beginning, and before the dollar just absolutely came and just crushed everything in the last, hour of trading. But we saw a much greater risk appetite emerge. And so what I teach people is to take on a more anticipatory approach. And in terms of the euro is overall and still a pretty bearish downtrend. We see these big moves that have taken place over the last year or so here. Actually, in particular, go really far back. On a weekly. Here's a weekly chart of that traditional cross between the euro and the USD. All right, and we can just see here. Just how pronounced this downtrend has been. And so for me, I think the dynamics and the sentiment of the market is such that any rallies we get in the euro I want to sell into. So in the case of the way the EUI is set up, it's the reverse opposite of that. So in that case, any sell-offs in the EUI I actually want to buy into. All right. So if the EUI were to sell down to that level of the pullback, I actually look to buy calls in the EUI. I'd actually looking to go long the dollar against the overall euro currency, and that's a spot that I would play using these Fibonacci levels. In that case right there. Currently, I have no exposure right now in this respective setup. Okay, in this currency cross. Okay, let me kick up a USD/JPY. Here's a weekly chart. Looking at just how much the dollar has actually rallied against the yen. The yen being synonymous with the major risk aversion trade. And when we talk about again compartmentalizing risk out there. So giving you as traders options, giving traders choices, using ISE options, and so in this case right here, from this major down move we see down here, we're getting a nice bounce. We're coming back somewhere near parity right in here. This is a spot on a longer term basis. Now, unlike the euro, the EUI, this market has exhibited some range. So this is the market actually being long gamma, being long premium, is a little more conducive to putting the kind of range in place that you can potentially profit from. All right. I think that actually that if we do manage to get a pop all the way back to this 110 level right in here, so we've seen this 15-period moving average begin to roll over. So I'm going to actually start buying these the pullbacks here. So like the 95 level is a great spot to go long the yuck. All right. And so we'll look at, you can play long calls with the yuck and to take on your exposure. And again, synthetic long calls, you can also, if you want to right here, put on a straddle, go long a yuck call and go long a yuck put. And if the market sells up, you can maybe sell into some of that. If it pulls back, you can use those puts as the backstop and look to play that move higher again as well. And so that's a classic case of maybe how you can use a straddle. That a big move is coming, okay, because of this big move here. Maybe a deeper pullback comes back again, with the dollar selling off, or maybe it keeps on going the other way, and we get a move all the way up to here as well over the coming weeks and months. Have some comments here. I'm looking at the market outlook. why it's still not on your desktop. Can everyone see the charts that I'm showing right now, or is it just Mr. Wagner? Okay, cool. Excellent. So that being said, we're looking at the USD/JPY in that regard, and that's the strategy. And there's a playing the yuck in that regard. That's how I'm playing it, is to wait for a pullback actually, and to get long there. Currently, my big position right now is I'm actually long a straddle on gold. But I'll get to that at the end because I want to focus on the currencies first, because that's what these ICE products give you the chance to do, to get in and do, is to play those accordingly. All right. Let's look at the British pound US dollar. This is the inverse chart of which you'll see for the ICE market, but nonetheless, so just roll with it. This is a weekly chart. First, we'll start with that, and what we see here is obviously a pronounced uptrend where the dollar is rallying rather ferociously against the British pound. In this case, the way the spot currency works, which is what you'll end up using to hedge off your exposure in most cases, or the futures as well. There's a lot of concerns going on in Europe right now as far as over the solvency of a number of Eastern Bloc countries, Hungary, Poland in particular, and that concern as far as the domino effect and what that may end up having. Will the larger European Union countries bail them out, and all those? The bottom line is that in that kind of environment, there's a lot of trading that can be done. And so while it doesn't necessarily correlate to the British pound per se, just kind of providing a backdrop of what these currencies are facing. So in this case here, obviously, we see a precipitous fall in the British pound and the precipitous rise in the U.S. dollar if I invert this chart here. And that's something that, if we get a deeper pullback to this 160 level, or in the case of the ISE, of the long dollar component, a pullback in that case, and that's a great spot to step in and buy the calls and be long the dollar against any meaningful pullback by the British pound. Because I think it's entirely feasible that this bad boy heads down to the 125 level in terms of the spot forex, because that's kind of what I'm seeing set up and develop in that major cross right there. We have we've covered it. Now let's look at the Aussie as well. Now we look at the Aussie here. Okay, so I'm taking a daily chart of this first. This is not really a market that I wouldn't feel safe being long the calls or long the puts, because it's just kind of dead. And to be honest with you, I wouldn't feel safe being short them either. This is a market that we've seen this pronounced downtrend. It tries to put in a rally. It's now basing. I would just as soon let this market base, before I get too committed one way or the other in that regard. And that's something that, as a trader, you kind of have to experience and be cognizant of, and what that can make happen. Okay, that was the Aussie dollar. Now let's look at the U.S. dollar, Canadian dollar, on the daily chart here. This to me is a great spot to put on a straddle. Just thinking about it right now. I don't have anything on this, but I'm thinking maybe tomorrow I'll go ahead and change that approach. We have such a key inflection point here at the 130 level. If the dollar can break out, I think it's going to rally. If it doesn't break out, what you typically see is this watershed effect where, you have this uptrend line in here. Everyone's like kind of banking that the dollar can scream against candle in here. If it doesn't, it grinds up, comes back, hits up against these tops. It finally goes great. If it doesn't, it's not staying at 128. We can be back down here at 117, lose 11 cents or whatever, and it's a great way to play that move right there. So I'm actually going to look tomorrow at a straddle between the U.S. dollar and Canadian dollar, and the ICE FX options are a great way to make that happen again, going long a call and long a put, and then just you can trade around that, or you can take a viewpoint as well.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.